Hey, what's up, everybody? Welcome to the stream. Hope everybody's doing good, doing well, staying healthy, not going stir crazy indoors. I'm starting to feel a little of that myself, and now that my basement project's kind of hit a hiatus for now until I get the next bout of materials, I've got to wait. So, yeah, got to find some other stuff to do, and I figured jump on here for a bit, do a quick stream. I just want to make this a short one today, just talk about crude oil a little bit, give a quick recap of the stock market, and yeah, not really a lot to talk about. So we'll just, yeah, we'll make it a quick one. Crude oil is like the most important thing I think that happened in the market this week, and it was pretty crazy. So I'll kick it off with the old disclaimer so you guys can't sue me. I'm not a professional. I don't hold any certifications or designations. I am not allowed to provide financial advice. So any information here on this stream is just solely my opinions and nothing more, not to be taken as investment advice. And if you were looking for investment advice, seek a professional. Okay, so start off with the SPY today. Kind of an interesting day. Ended up dropping this week, so we ended up topping out just over 287, dropped down a little bit, and it seems like it's kind of struggling to get above this moving average line here. So we're kind of running into a lot of support as it broke down from this wedge. And a rising wedge breakdown, or sorry, rising wedges usually break down. Sometimes they break to the upside, but didn't look like it happened in this case. So we kind of coincided that happening, which I mentioned in the last stream, with the declining indicators, with a rising price, declining indicators here. So it was kind of, we're just waiting for it to happen. And it finally did. So yeah, got a lot of resistance right now. It looked like it might have been able to close over that 50-day moving average, which is this blue line here, which is currently sitting at 279.89, and we closed just below that, so 279.17 today. So maybe, we'll see what happens tomorrow, but I don't really think that's a bullish sign for now, considering we got the breakdown from this wedge. So I'm not going to make a call that's saying that we're going to hit new lows or anything yet, but surely for the near term, I don't see any more upside. Maybe we'll get some consolidation. I'd like to see what happens around 259 here, something like that. You can kind of see that on the daily chart too. Today's high hit the 50-day moving average. So I think this was Friday here. We weren't able to close, or sorry, we were able to close over it, but then the opening on Monday got hammered back down and then gap down to around 272 on Tuesday, and then today we filled that gap that created and didn't close above the trend line. So considering how the MACD is starting to look here, we're starting to get a little bit of a decline. I would expect a pullback bit, but maybe like around 262, we'll see. Just gotta kind of play it by ear, see how things go. You kind of see another point of resistance was the 100-day moving average at 282.37. So yeah, we closed above that last week, and then this week we are currently sitting below it with a bit of a doji candle forming. So, and the same thing here, a little bit of that one too. So that's something to note. We'll have to wait to see for what the end of the week close looks like. Then I'll probably do a stream on Friday to kind of go over that and see where we're at. So, yeah, main point today, oil. This thing is toxic AF, okay? And that's code word for as fuck. And so don't touch it. Oil is basically like, I don't know, like subprime 2008. Nobody wants to touch this thing right now. It's it's diseased. It's got the COVID. It's got everything. It's got AIDS. It's bad. Don't touch it. So what happened was the crude contracts actually went negative on Monday, which has never happened before. That's a new historical record. So I mean, we're breaking all kinds of records this this go around in this dip. So anybody who is basically telling you that they know where this recovery is going and say like they're talking it's going to be like 2008 or it's going to be like 1987, they don't know shit, okay? Because Nobody has ever seen this kind of stuff happen before. So how are you going to be able to make a certain call in a market where it's breaking records and we're in completely new territory? Nobody knows what's going to happen here. People have ideas. You can have an idea of which way the market might go based on the economics, but it's not for certain. So kind of really just playing things as we see it here, and trying to limit our future calls to a reasonable time frame. Okay, a rational time frame. So I don't know if that's over a month or what, but yeah, I would not be trusting anybody who's making calls on like new highs this year or something like that, because they don't fucking know. So yeah, crude contract went negative. So the way these contracts work, so you say you want to buy April contract for May delivery. So it's like you're gonna pay a price for April at April for May delivery. So the way it's working right now is the futures market is in contango. So right now the spot price is lower than the futures contract price. So say oil's $10 a barrel now, they're asking, like, and this is just a hypothetical example, they're asking $20 a barrel for delivery in June. And so obviously you're going to pay more. And if oil is still at $10 in June, well, you just lost $10 a barrel. So it's not a good play. So that's kind of what happened here on like a way more massive scale, is that the May contract um, ended up tanking because all these traders had these contracts and nobody wanted to buy them. So like what they usually do is they hold the contracts because they're just traders. They're not taking delivery of the commodity. They don't want the oil. They don't want the physical oil. They just want to trade the contract and make money. So they ended up buying these contracts, and usually they roll them over into the next contract. So you're able to make a little money on it and you mitigate your losses. Well, this time it didn't work out like that. Nobody wanted the contract, so they couldn't roll them over. So so they basically had to pay people to take their contracts, and the mercantile exchange allowed them to trade at a negative price and allowed them to do that rather than going bankrupt, because that's what would have happened. These guys would have had these contracts and they would have had to guarantee delivery. So you know they have these contracts, expires. Well, hey, guess what? Now the fucking tanker trucks are coming to your door and you got to do something with this oil, or you go bankrupt. And so would have had to default on the contracts, and they would have lost a lot of money. And so the mercantile exchange actually allowed them to go negative and sell the contracts at a loss, at a major loss. So usually people buy them from them. They had to sell them to the people, like, or yeah, like they had to pay the people to take them away instead of getting something for them. So crazy, crazy times. And that's starting to spill over a bit into the other contracts. I just wish these ads wouldn't come up. Like, I'm trying to give you guys a scream and I got, or a stream, and I got panties showing up here. Like, fuck. Like, I don't need the distraction right now. Okay, so it's starting to roll over into the June and July contracts as well. So June, I mean, look at how much this thing is tanked over this month. Up from 30 down to a low of 650. So pretty crazy. So I mean, I don't know what's going to happen to the futures curve eventually, but people who are buying these contracts are losing money. And I actually heard, and I haven't confirmed this yet, but that the brokers are no longer allowing traders to buy and sell contracts. So essentially, the way these ETFs work is that they roll over their contracts and trade their contracts. They're essentially kind of defunct. And I'm not sure exactly what's going to happen with them. Like, I'm not an expert in this area, but I would think if you're not allowed to trade the contracts, how can you really fund the ETF, and how can you really even provide value, because you're not actually trading the instrument that the fund is based on? So that's what these guys do. They buy the contracts, from May to June, June to July, blah blah blah, and they roll them over, and then that's how they sort of follow the price of oil. So you're not actually tracking the physical asset in this. You're just tracking the contracts, which makes them, in this case, fucking dangerous, very dangerous, because these contracts are essentially becoming worthless, because there is literally nowhere in North America to store this crude. So all storage has been completely spoken for in May. So there's nowhere to put new produced crude for May. So as of May, whatever it is, I think I heard mid-May, uh, there we are plumb full. Nowhere to put oil. So I would expect producers will be shutting down their plants, which is a big fucking deal, and it's very expensive, and you lose a lot of money because these plants, when you shut them down, you still have to staff them and keep them running, sort of. So it's like you shut them down, and you still got to keep them heated, got to keep all your pressures in check and stuff like that, and requires staff. Things can still break and go wrong even when it's shut down. So, you know, it's not like you just shut them down and you're not incurring expenses anymore. It doesn't work like that. And then starting them up is even a bigger deal. If you have to shut down a refinery, sometimes it takes weeks to get those things lined out and operating properly. So yeah, big problems in the oil sector. A lot of hurt income coming. This is like subprime 2008. I mean, it's a collapse really. So, Donald Trump's talking about oil bailouts now, and I think that's the new cool right now, is just to fucking bail out everybody. Even though this is literally genuine price signaling right now. I mean, if you can't use the oil and there's nowhere to put it and there's no use for the new stuff, it's almost kind of worthless really in the short term. Eventually the demand will come back when the economy comes back, but whether that happens in a month or in 2 months or 3 months, we don't know, because every country is handling it differently. So Trump's talking about starting the U.S. back up, so that'll help ease the demand destruction a little bit. But I mean, is Canada going to follow suit? Is European nations going to follow suit? South America, blah blah blah. So there's a lot of ifs here, and not a lot of certainty. So for now, until this whole contract fiasco gets sorted out, um, and I mean, we look at so that's the July contract. Look at how much that's plummeted. Got down to a low of 17.29 as well, and August down to 20 at a low. So yeah, these things are getting hammered. And like I said, how can you even know when this is all going to get sorted out unless the economy opens? Because we need to clear that glut out, and until that storage starts coming down to levels where now they can take more, they can actually take delivery, then this whole thing's not going to really be solved. I mean, chucking money at the problem is not really going to help anything, because it's a physical storage problem. Nobody's using the fucking oil. So if nobody's using the fucking oil, there's nowhere to put new stuff. So that is the underlying problem here. So I would recommend that nobody touches oil ETFs right now that rely on contracts, and just wait. Just wait till this all works itself out, because it's super, super risky right now. And I feel like, if these future contracts are real, and say the June delivery, it maybe goes back up to 20 or even stays at 14, what's oil going to be at when time for delivery comes? I would expect lower. Like I said, if there's no room for new oil in the storage capacity, there's no use for it. It's worthless. So it has no price. So why would it not trade at zero? So there you go. So I mean, there is a little bit of demand, so it's not going to trade at zero, but probably I would expect lower. I called 10, and it looks like it'll probably go down even more than that. Maybe it's possible. So pretty crazy times we live in right now. So yeah, my thesis: just stay the hell away from oil. It's a poison apple right now. I mean, it's sad because you see a lot of guys on StockTwits pouring into these oil ETFs, and like you can see it in the fund flows. The fund flows, I think USO broke a record for the amount of inflow. So people buying into the fund, and it's sad because a lot of these guys don't really understand how these things work. And I didn't so much either before, and then finally I ended up wising up and looking it up, and I'm like, whoa, don't touch this. This is bad news bears. So it's sad to see these guys piling into these funds, and they don't know that their money is going to be dropping. I mean, look at USO down 11% today, and some Canadian leveraged ETFs that follow track oil, they got halted today. So that's another kind of big deal. So a lot of volatility in it. And yeah, I mean, if you're looking at, like I said, where you're buying the oil at $10 or $20 and it's really only at 10, it's not going to go up. not going to go up 20 by the time your delivery comes. Your contract is basically 50% down at that point. You just lost 50%. So, expect these things to have all the time. And I also heard a rumor today too that USO is reverse splitting 4-for-1, but I got to confirm that as well. I'll confirm that tonight. So reverse splitting 4-for-1 means that say you have 1,000 shares at 250. Well, now you're only going to have 250 shares at whatever price they determine that to be at. I would imagine they group or quadruple it. So whatever, so yeah, you're going to lose money that way. Reverse splits are never really a good thing. That just means more decay to come. You can see that one guy compared it to the TVIX ETF that was around that used to be short-term. How would I put it? Inverse short-term futures for the VIX, and that imploded in 2018 when the VIX shot right through the roof, and those futures contracts became worthless, and the fund had to close down, and everybody lost their money. So don't be part of those disaster stories. Protect your cash, know what you're investing in, and trade accordingly. So I'll wrap it up there for now. Like I said, I wanted to make this just a quick one to kind of get the word out about oil and what not to do with it, and that's buy. Don't buy it. So you guys just protect your cash, like I said. I post a lot of this stuff on StockTwits in real time, so give me a follow on there. Bestia is the name, same ugly profile picture, all that stuff. So follow me on there, and I'll see you guys probably on Friday. Peace.